Hey guys, welcome to the Trading Academy day 40. Yeah, day 44. I think we're going to end the academy with tomorrow's video. So we'll end the week off and we'll end the academy at day 45. I think 45 days has been more than enough. So yeah, we'll be ending the academy tomorrow. I'll make a like an ending episode tomorrow. But what I wanted to go over with you guys is just a trade recap and how I was able to past 20, 50K accounts on Apex, which is $1 million in funding. I literally just passed them. This doesn't mean like I'm getting a payout or anything like that. I just passed the accounts, which is something that 98% of people can't even fucking do. So we ended up passing 20 of them using a trade copier on Tradevate, but I'm just going to break down the trades that I ended up taking on these Apex accounts and really just explain why I took them and really just showing you guys how I put everything together. So that way, maybe this video gives you some clarity on how I trade and how you can blend all of this stuff together. So, all right, so let's get into it. All right, so coming into the day, actually, let me go on the 5-minute. Coming into the day, right? And I'll go over these executions over here on ES as well because I did trade on ES. Yeah, there's some executions there on ES. Anyways, all right. So coming into the day, I was looking at a range up here on the 30-minute. Now we are above all-time highs, and when we're above all-time highs, it's a little tricky to be honest because the reason for that is because institutional order flow is bullish, and when we're above all-time highs, there's really nothing to target. There's no liquidity to target, so it's very, very hard. So that's why the candle range theory becomes so clutch because you're literally trading internal ranges. You're trading internal ranges. You're trading candle ranges. Okay, so it becomes clutch because when you're at all-time high and you don't know what to target, it's good to play these internal ranges. So, anyways, we had this setup here, this range here at 8 a.m. Eastern Standard Time. Right, we had a nice little range. And remember what I said in the earlier videos of the Academy. I always tell you guys to wait for candle closures because it's very important. So you have to wait for the 8:30 candle to close here. It opened higher, comes and sweeps it. And at first glance, you might not see an SMT until you look at YM, right? This is why it's important to have YM on your charts because if you're just looking at NQ and ES, you're not going to notice the SMT, but there was an SMT here at 8:30. You guys see that right here at these highs. So seeing that, I didn't take a short up here. I wanted to, but I didn't take a short because, again, we're at all-time highs. I'm like, fuck, I'm just going to wait for 9:30. 9:30 opens, and we just come all the way down, okay? We just die, okay? Right at market open. We come to the new daily opening gap, which is, again, remember, 1,800 opening price. You guys see that? It gapped up. So this is the opening gap. This is a draw on liquidity in itself. This is a PD array that you can target. Comes all the way down, melts all the way down to there. And if I go on the 5-minute, I don't know why it's not showing here, but let me go to the NQ chart here. So when 9:30 opened, we came all the way down and then 10 a.m. opened, okay? So once 10 a.m. opened, I'm not sure if we had, I don't think we did, or did we? Yeah, we did, I think, right here. Yeah, so we had an SMT divergence at 10 a.m. open. 10 a.m. opens lower. We have an SMT right here with NQ. Right here. I don't know if you can see anything on YM because it's all the way down here. But we had a SMT divergence here at the 10 a.m. open. We literally opened lower. We have an SMT right there at these lows between 9:55 and 10 a.m. with NQ and ES. So seeing that, I was like, okay, so we have an SMT divergence at 10 a.m. This 5-minute is going to become my range for the moment, okay? So this 5-minute becomes my range. We literally tap points of control here on the 1-minute. As you guys could see that, I got in on this candle once we started getting confirmation that we're going back up. We're respecting this fair value gap, this order block right here as well. I go into there. I'm not worried about this coming back down and tapping point of control. It could definitely do that if it wants. I just don't want to see an invalidation of these lows, right? Because we have SMT. Well, we have SMT at these lows right here, right? So ES made a lower low. This makes a higher low. Shouldn't get below that. It's a protected low, okay? So then we start pushing up, and I get out right before the range high gets taken on the 5-minute. So this black line right here is the 5-minute range high. I get out. I pretty much trimmed right above equilibrium. So if I were to take out my fib and mark out the 5-minute range, so we're well above equilibrium. We're in OTE. We're hitting this order block. And the reason why I trimmed right here on this order block is because when order flow is bearish for the day, Like this is intraday order flow, right? Meaning that like if I go to the 5 minutes, very clear to see that, you know, we're displacing lower with speed. We're breaking lows. So when I see that, I'm like, okay, I don't want to go against the order flow for the day. I'm just going to go ahead and get out at that 1 minute order block. It ends up sweeping the high and then goes back down and then comes back up for another high. And this is where we make an SMT divergence. I didn't participate here because I was actually busy doing stuff, but I didn't participate doing like in this trade right here. I just wanted to wait till PM session. And if you guys haven't seen my TikTok video, I pretty much say like, hey, you guys should just wait for, you guys should just skip out on 11 to 1 and just come back at 1 o'clock, right? Or, you know, around 12:30 or whatever. So skip out on the first like hour, 90 minutes, 2 hours, whatever it is until you see an opportunity, right? Because most of the time it'll accumulate to gear up to go into the PM session and make another move in PM session. So right here, there was actually another trade to be taken, but I did not take this. Again, I was busy. I was getting a haircut. You guys see this fresh ass cut. I was getting a cut. But 11 a.m. opens lower on ES, and we literally get a SMT divergence. This was right before I went to go get a haircut. I literally just scalped 2 contracts here, and I got out right there for a tiny ass profit. I don't even count this as a trade, to be honest, but very quick scalp before I had to run to the barber. I really don't like trading when I'm driving or anything like that. So quick scalp before I left, made like $80 off this, off 2 contracts. But as you guys can see here, if I go to the 15-minute real quick, 11 a.m. open lower. We had the SMT with NQ. So this 15-minute becomes our range, right? Because why? Because we close the body below all these lows. So this becomes our new range or our suspected range. And then 11 a.m. opens, which is a key time because it's a new 1 hour opening, new 5 minute, new 15-minute opening, etc. We come down, we sweep the low. We have SMT at the lows with NQ, right? You see NQ. Boom. We sweep the lows. We push up. We take range high, and then we go up a little bit more to take out all this liquidity. Now, a very important thing to note here is if I go on the 15-minute and I mark out my range from the morning high, right, this high all the way to this low, you guys can see here that we are in premium, right? We're hitting premium. Okay, we're above equilibrium. We're in the premium market. We're hitting this volume imbalance right here. And I didn't teach that in the academy because I felt like this PD array right here is not like a super important PD array. It's kind of like a fair value gap, but it's like less important. They don't pop up as often. They pop up a lot on ES, but not on NQ. A volume imbalance is basically just like a little gap like this in between a candle. Okay, it's very simple. That's called a volume imbalance. You guys notice how there's no gaps. Like when a candle opens and closes, there's usually no gap in between them. But over here, there was a gap because this was the 945 news. There was news right here that sent us lower, and it opened. It didn't open where this candle closed, if that makes sense. So it left a gap. We came up to that. So that's a premium PD array. And we also just tapped into the 15-minute fair value gap there, right? Another thing I want to note is that, you know, ES doesn't need to tap premium, right? As long as NQ, if NQ taps it, that's already an SMT in itself. So if NQ taps premium and ES does not, that's perfectly fine as well. And technically, ES did end up tapping. Actually, no, it didn't. Hold on. I'm trying to anchor this right. No, it felt like a quarter point from tapping it, but it's perfectly fine because NQ already tapped it. Okay. So, let me go back to NQ. So hopefully you guys are seeing how we're putting all of this together, right? So we scalped that little, you know, that little move on ES for like $80, $80, $90. So when I got out of the barber, I was noticing, okay, so we already hit premium. We're hitting this volume imbalance. We're not getting any bodies above it. We're not closing bodies above it. We're just literally wicking and tapping into it, okay, which is perfectly fine. So we ended up getting an SMT divergence right here. Let me pull ES up over here on this chart. We ended up getting an SMT divergence here at 12 p.m., which is another key time because it's a new 1 hour opening, etc. Okay, so we end up getting I need to pull up the NQ chart. So we ended up getting an SMT divergence right here. 12 p.m. opens higher, right? 1, 2, 3 highs, and then look at ES, right? ES doesn't make a higher high, right? Neither does YM. YM does not make a high like NQ did here at 12 p.m. open. Opens higher, comes down. We retrace back up into this volume imbalance, and there's one on the 5 minute as well right there. We come back into what? We come back into OTE of this range, which is a order block. We're in a premium of the bigger range of the external range, and we have a premium PD array right here, and we're an OTE of this small range. You guys see that? So I ended up going short on here, let me pull up NQ. I ended up going short on NQ. I scalped one contract because on the 50K accounts, it's very close to passing, so I just needed a little bit of a scalp. I scalped down here too because of the drawn liquidity. But if you guys notice on my Instagram story, I traded ES on my Top Step funded accounts. I went short right here at 1205, but then ended up getting stopped out at break even up here. But I quickly re-entered when I noticed we were holding all this stuff that I just mentioned, right? We were holding this order block. We were holding this volume imbalance. We were in a premium. We're holding it. It's just what it's doing here. If we're right about, what we're looking at, if we're right about turtle soup and we're right about this being the manipulation candle, it can come up into OTE, and that's perfectly fine, right? So I noticed that, and I was like, okay, I'm gonna have to reshort this, right? Here at also at 12:30. No, never mind. Okay. So, anyways, when it pushed up, I noticed that we were holding this 5-minute fair value gap as well. And yes, we weren't closing bodies above it. So I ended up getting stopped out at break even on my Top Step accounts, but I quickly re-entered right here on this candle and 12:35 candle. If you guys want to go see the execution, go peep the Instagram story. But yeah, on the Apex account, I literally just sold one here and then ended up taking profit here after we swept this low right here. Okay. And all I needed at that point was just, like $200-300. So I ended up scalping one contract down to here and ended up taking these lows right here. So that's where I ended up taking profit right here at these lows. I didn't hold it down to here because it wasn't really necessary. I only needed about $200-300 more to pass these accounts. But yeah, so hopefully you guys are seeing how I'm like putting all of this together. It wasn't, it's not super hard. And also, if I turn off my executions really quick, I was looking at this 1 hour candle to potentially be a range as well. On the 1 hour, you guys see this 3 candle formation. So this is your 11 a.m. open. Remember, we had an S&T down here. We come up, tap into all those premium PD arrays, the premium range, everything that I just literally talked about earlier in this video. We come up at 12 p.m. We open high. We have an S&T up here. So this candle is the manipulation candle. The 1 p.m. candle opens higher, and this is a distribution candle to go down to the drawn liquidity, which were these relative equal lows here on NASDAQ. And the same story on ES, right? We had relative equal lows right here. Boom. As you guys can see here, 11 a.m. is our range as well. But we have an SMT divergence. So the next 3 candles are distribution candles. Okay. So this is your manipulation candle. Because why? Because we have SMT. That's how you can tell if a candle is manipulation or if it's distribution. Manipulation usually occurs with SMT because it's a Kraken correlation. They're manipulating price, right? All the indexes are supposed to be correlated. But when you have a Kraken correlation like that, that's manipulation. Next couple candles should be distribution. Okay. So it's a simple accumulation, manipulation, distribution. Okay. That's all it is. It's not hard at all. But as you guys could see, you guys seen how I put everything together from the academy to execute these trades. So hopefully you guys can do the same. But yeah, I think that's going to be it for the academy, boys. I did want to record this video just to show you guys, like, putting it all together and stuff like that and whatnot. But yeah, man, it's been a cool little thing showing you guys, all these things for free. It's literally what people pay tons of money for the same information, bro. So I just uploaded it on YouTube because I didn't feel right, selling a $3,000 course with this type of information. And it just doesn't sit right with me. So I was like, you know what? I'm going to release the course for free. If people want to pay me after that for my private Discord group or for a private mentorship, going deeper into like a lot of these concepts, literally holding your hand till you get funded, like stuff like that, then you guys can pay me. I'm not forcing anybody to pay me shit. That's why I uploaded this shit for free. Exactly why I did, right? And to help anybody out there that really wants to take this shit serious and wants to capitalize on free information, well, here you go, motherfucker. Capitalize on it, all right? Make me proud. Jump into the free Discord if you want. I have a free section in the Discord that you guys can just come in, chat with other like-minded individuals and stuff like that. But yeah, hopefully you guys enjoyed the academy. Please leave me a sub, a like, comment how you guys liked it and enjoyed the academy. And yeah, I'll catch you guys tomorrow for the farewell video for the academy. It was fun. It was a cool ride. And yeah, I'll catch you guys tomorrow to end off the academy at day 45, which is also the end of a weekend. So or the end of a week. So you guys can go into the week, into the weekend, maybe watching some of these videos and stuff like that. And yeah, I'll catch you guys in tomorrow's video. Peace.